I think conundrum is the right word here. There's mixed data. You know, just last month, the World Bank was talking about the economies going down and the market sold off. Now the IMF says the economies are going to go up. So there's inconsistency month to month, and you can't turn the tanker around so quickly. And I think you need to see consistent data that's consistently improving, not just stabilizing or not going down as fast, for then to get a better sense of growth.
You see, until now, the answer has always been that although they're not growing, the rate of decline has been slowing. We now seem to have some doubt, but the IMF study does say that next year, the World Economic Outlook, that things will be better.
Well, you know, from a low base. So the question it's like, okay, we're going to bounce off the lows, so are we going to go back to substantial growth,
no.
the good times? No, so the question is like, from a very low level, can you improve? Absolutely. But if you're improving from a low level, is that real long-term substantial growth, or just an uptick from a low base, essentially?
Bob Parker of Credit Suisse Asset Management, who I read frequently, it basically says what this is the confirmation that we all got a bit oversold and a bit exuberant about how fast things were going to recover, the market particularly. Do you agree with that? I
do think the market's priced in a huge amount of positive information and dynamics. I think the stock market's up 30 to 40, or emerging markets 60 to 70% in a short period of time. You know, I think that the data has not caught up with the market yet.
Right, but does the market consolidate at those levels and just not go further, maybe a minor correction, or does it have a major correction and come back down again?
I think it's the former. I think it bounces around these levels. I think you have more volatility as people are perplexed about whether it's going to move up or move down a lot, so you're going to have more volatility in terms of swings. But I think it does hold around these levels, and I don't think you have the gains for the past 6 months that you have for the next 6 months.
Whichever way we cook this turkey, at the end of the day, the economic action in 2010 is in Asia, it is in Southeast Asia, it is in parts other than the US and Europe.
Yeah, that's well documented. China never got into the mess that it did before. They've enacted a very large stimulus plan. It's already been put to work. Brazil is looking relatively robust in terms of Latin America.
Time to do the traffic lights. Let's be specific here and talk about Europe. Particularly because that's really, we've got these two stats from Eurostat. Which light do you think we do on the basis of the WEO from the IMF and the Eurostat?
I think we're in yellow.
Yellow?
I can't give it a green, you know, unlike the IMF.
But hang on, why are you not giving it a red? It says things are still grim.
Well, they're grim, but not continuing to get worse. So if I'm in status quo, if I'm holding at the light, I'm in yellow. If I'm, you know, stopping dead and going slower, then I'm in red. So I think I'm in a yellow zone right now.
I think you're being a little optimistic with your I'm going to make one change to that. There you are.
There you go.
Can we agree on that?
Yes, we'll agree on that one.
Okay. Many thanks.